What's up, guys? Tas here. So the markets are all over the place today with about 40 minutes left in the session. The S&P's down 0.3%. We have the Dow up 0.3% as the Nasdaq 100 is down over 1% and the Russell is up almost 1%. So all over the place. I want to break down some technicals in this video, go over some stocks I'm looking at, and also talk a little bit about where my head is at as a trader, as an investor, as we are a bit frothy overall in the markets now. So make sure to hit the like button, subscribe if you all find value, and you could also get $30 free from M1 Finance, $10 from Coinbase, and you guys could check out my Patreon. All of those are linked down below. So let's just get right into it, starting off with SPY. And as of now, we actually are selling off, but earlier in the day, we hit an all-time high, 413.96, almost 414. You guys can see that here on the 5-day 5-minute. And another thing you notice on the 5-day 5-minute is we are fighting to hold the uptrend. Would you take a look at that? The SPY is holding a higher low right here at about 411, 410 as of right now, and we are fighting to close the day on a nice upswing. And taking a look on the intraday chart, we're actually still in a downtrend on the intraday chart, right? We're still at a lower high at about 412 right now. So if this were to break, we probably will see a nice rally into the market close. But as of now, it could always get rejected at 412 and dump off into the market close. That is still a possibility as of now, and we'll see how this progresses over the span of this video. So SPY is selling off, and it's not even taking the worst hit. We have the Nasdaq 100 taking an even bigger hit. Tech in general is not doing so well today. You guys can see this hit an all-time high yesterday, a little bit over 14,000, and now we're down over 1%, down 150 points, right back down to 13,800, which, if you guys recall, that is a level of support I mentioned recently, as it was an old all-time high from back in the beginning, more towards the middle of February. So the fact that we're holding 13,850 roughly, that is a good sign, but I don't know if it's going to last, quite honestly, guys, because earlier in the day, we dumped under 13,800. That was literally about 15 minutes ago, and we went to 13,788, and overall, the intraday downtrend is still intact, so there could be some more selling when it comes to the NDX here, to the point where maybe it fills the gap down to about 13,500. That is right around the all-time high from back in the end of January. That's about a couple hundred points from where we are now. I believe NDX could easily do exactly that. Go down about another 200-300 points from here. And opening up QQQ, you guys can see where would that end up going? It would probably end up going to about 330, 331. And this is an ETF, as many of you all know at this point, that tracks the Nasdaq 100. So yeah, is this a top? It very well could be. You know, we've been calling out the bearish divergence between the RSI, the volume, and, you know, the overall chart here on QQQ. SPY, we've been calling this out for a couple of days. Now we're finally seeing a bit of a drop, and we have to see if this persists or if we just end up rallying right off this point. And as of now, again, it looks like we are selling. So I'd love to know your thoughts down below in the comments. And small caps are crushing it today, guys. It looks like Russell wants to play off of this 180 moving average here on the 4-hour chart. So IJR is going to be an ETF I'm watching on the long side here for the Russell 2000. I believe this could end up going to 114, 115 in the short term. There could be another 3 to 5% upside in IJR. So those are some thoughts in the markets. It looks like small caps are doing well right now, and tech is taking a hit. We'll see if this persists. And again, I'd love to know your thoughts. Let me know down below in the comments. And if you all are enjoying the video, hit that juicy old like button. Make sure sure to smash that. And let's talk about some stocks here. And I'm not sure how many of you all caught my Coinbase video earlier. Make sure to check it out. I'll link it down below. But Coinbase is finally here. Coinbase stock is live, and we're going to look at some action right now. Again, we have about 30 minutes left in the session. And take a look at this. Like we predicted in that video, there's going to be volatility. And oh boy, were we right. This thing went from 430 all the way down to 310. Lost about $120 of value. That is 30%, guys. And if you all were looking at it, we were at about $100 billion market cap when Coinbase was over 400. Now it's down to, let me pull up my phone quickly. Last time I checked, the market cap was like 85 billion. It could be even lower than that. But overall, this thing is taking a beating. Talk about volatility. And this comes down to another point we made. Okay, yep, it's 87 billion right now. Interesting, right? And this goes back to a point I mentioned in the Coinbase video earlier, right? And we'll cover that now a little bit. There's many ways to go IPO and to go public, shall I say. One of them is IPO, the initial public offering. We've seen a lot of SPACs recently. That's been the hype wave over the past year, 2 years, whatever. And you could also go public via direct listing. And that's exactly what Coinbase did. And most companies, they go public via IPO, right? And Coinbase did direct listing. And the big key difference here is when you do an IPO, there's a lot of underwriters, there's a lot of investment bankers, institutions, banks working for you. They take a fee out of the price of the stock. They take about 3 to 5, 7%, whatever. They get their chunk, of course. They deserve to get paid. And there's shares that are created in the market, right? There's however many brand new shares that are put out. That is how an IPO works. On a direct listing, which again is what Coinbase did, it's completely different. There's no new shares that are created out there. No new shares. The thing is, the insiders sell the shares, right? So there's no new shares, but when a company goes public via direct listing, when you're buying the shares, let's say I bought Coinbase right now, I'm buying directly from an insider, somebody that's dumping out and selling to me, right? And you can see maybe that is why we're seeing a lot of selling. And if you all looked at the level 2 for Coinbase earlier, and let's just take a look at it now, why not? There were a lot of sell orders. I mean, a ton of sell orders waiting on the market to be filled because, again, they're looking to dump out. And the way people make a ton of money in Coinbase or companies that go public is not when they go public. And sure, if you buy on IPO and you hold long term, you can make money a lot of the time. A lot of these stocks do well long term, but a lot of these insiders, they make money when the stock goes IPO because they've been in it, or when the stock goes public because they've been in it for years sometimes. Could you imagine somebody that was investing in Coinbase like 5 years ago or something? You think they want to hold on to the shares now when it's public? Of course not. They made 1,000x, 100x. That's the type of returns these people are making, and they're selling the shares to you, right? That's just kind of what's going on right now. And I'm not saying Coinbase is a bad investment. I think, truthfully, it's a bit frothy. I mean, I've seen people, analysts, I was reading, somebody was saying the true market cap for Coinbase is 20 billion, which if it got to 20, I mean, I would definitely buy it at 20 billion. But, 100 is just ludicrous is what I think. And a lot of people were thinking that. And it IPO'd or went public right around there. So I would be a buyer of Coinbase. And literally a couple weeks ago, guys, people were buying these shares for about 50, 60, 70 billion market cap. I would be a buyer if it were to go down there, down to about 50, 60 billion. That is where I think we'd get a good value. And maybe it's under $300 a share at that point, and maybe mid 250s. That'd be nice. And the initial IPO price was, or public price, whatever, offering price was 250, was it not? I mean, yeah, exactly. It was 250. Now we can see Coinbase is up about 34% on the day, still where it's at right now, up $85. So yeah, 336 minus 85, roughly 250. So that is where I'd consider buying. Right here, I'm not considering it, and I'm not really FOMOing into Coinbase. I mean, I'm not worried about it at all. I already own Bitcoin. I've been buying Bitcoin since under 10,000. You know, I've made money there, so I'm not really FOMOing into Coinbase. Again, if anything, I'm waiting a couple months to see how things shake out. And overall, if the markets take a hit, let's say S&P drops from 4,100 to 3,500, or we get a nice 10-15% correction, which I would love, Coinbase is going to get slammed. Bitcoin is going to go down a lot more than what the market goes down. You know, we could see Bitcoin go down 20%, 25% easily, and I think Coinbase stock will get slammed if that happens. So keep that in mind, guys. As of now, again, I'm not looking to buy it. And make sure to check out my video earlier if you want more analysis on Coinbase stock. That I'll link it right down below. But those, in a nutshell, under a couple minutes, those are some thoughts that I'm having right now. And we saw a lot of banks report earnings today. We saw Goldman Sachs, JP Morgan, we saw Wells Fargo, and Goldman Sachs, they really had a great quarter. I mean, a really good quarter. The stock's up 3% right now. We got EPS, it came in at $18.60 versus $10.22 estimated. They completely crushed EPS, and they saw EPS last year. This is nuts. EPS last year was $3.11 in the same quarter. So they pretty much 6x their EPS from last year, and revenue came in at $17.7 billion versus the $12.5 billion that was estimated, and we saw revenue last year in the same quarter was $8.7 billion. So guys, I mean, revenue doubled up from last year, EPS 6x from last year, and out of all the banks, like I mentioned before, and I'm sticking to this, guys, banks, cruise lines, airlines, if you're looking at these right now as long-term investments, I truly believe the ship has sailed, right? I was talking to somebody, and if you're watching this video, I believe your name was Sean. Shout out to you, Sean. He was buying JP Morgan at $90, right? JP Morgan's now, we'll talk about this in a second, JP Morgan's now at $150. That was the time to buy. 90, 95, 100, 105, 110 even. Those are good prices. Now at $160, I wouldn't rush it, right? Goldman Sachs at 380 or 350, 330. Long-term wise, I would not look at it. But as a trade short-term, Goldman Sachs actually is really appealing to me. We can see overall wedge here on the 4-hour chart. We're peeking out of it as of now with the nice earnings that came out, and rightfully so, right? We broke out of the 180 SMA, 50 SMA, and the high points from all the way back in the end of March at about 336. Now we're holding 336 as support at the close of the market roughly, which is a good sign. And earlier, we were well over 340. So I think these are the early stages of a breakout on Goldman Sachs. And I think personally, guys, I think we could end up making our way back up mid 340s, low 350s. That is where I think we could end up going. And as a trader, that is that's solid. That's not bad. That could be about a 5-6% move from where we are right now if this gap is able to fill. And of course, always do your own research, guys. Don't buy anything based on my opinion. You must understand it for yourselves. And again, it's just my opinion. I really think Goldman Sachs could do well here. And JP Morgan, you guys can see on the 4-hour chart here, it's holding an uptrend, and we see a clear resistance at 155. That's been a resistance for the past over month and a half, almost 2 months at this point. I think JP Morgan, with the ascending triangle that it's forming right now, we could hold the low 150s. We're already oversold, and with a decent earnings report, which I didn't even mention, they did EPS of $4.50 versus $3.10. Revenue came in at $32.3 billion versus $30.52 billion, so they double beat there, and revenue's up year over year. So with the nice earnings report, oversold stock as well. We're towards the lower end of 150, right by the support of the uptrend. I think this could hold. I think ultimately we could fill the gap to the mid 150s as a trade. And if 155 breaks, we break out, the ascending triangle plays out, and we end up going to 160. So overall, in the short term, I see about $10 per share upside here on JP Morgan, maybe about 5-6%. And again, always do your own research. That's just my opinion. And we had a lot of Bitcoin plays, crypto plays get slammed today. One of them here is Mara. also known as Marathon Digital Holdings. This one's down 15%, and I'm not really sure why. The only thing I could have thought I could think of here is maybe they're just dumping to buy, to buy Coinbase. Maybe people are dumping Mara, Riot. Both of these are down 15% today. They're probably dumping these to pick up some Coinbase IPO. Square is also down about 5% now that I'm looking at it here on my watch list. You guys can't see it because my face is there. But yeah, that's one reason I'm thinking of. Let me know in the comments if you have anything to add to that. And overall, I think this is a buy the dip scenario for Mara. This is one we've made money on many times in the past. We called out the breakout to the high 50s, and now I'm going to call it out again. If low 40s can hold right around the 180 moving average here on the 4-hour chart and the overall uptrend, this could be a buy zone, $40, $45, anywhere in that area. And if it cracks under 40, starts to creep into the mid-30s, that's where I'd get worried a bit. The trend would be broken at that point. Maybe we go to test the low 30s, but we're not there yet, so let's not get ahead of ourselves. As of now, the trend is still holding, so we're going to play it that way. And again, look anywhere from 40 to 45 to maybe add some shares. And we have ROKU breaking out. ROKU's up a decent amount. Well, not today. Yesterday it was. Today it's down 3.2%. Yesterday it broke out of the 180 SMA here and the overall wedge on the 4-hour chart. That is a very good sign of momentum here. And we did run up to about 395 today pre-market at market open as well, almost $400. And now we're selling off. So I want to see if ROKU maintains the resistance of this wedge as support. I want to see overall if it remains out of the wedge. That would be very bullish. And if it takes out the 400 level, I think this stock could end up flying. And overall, even here at 375, 380, if you like ROKU, like the dip here, this could be a decent opportunity. 5-day, 5-minute overall, the uptrend is still holding. So watch out for this. 375 up to about 400. If 400 breaks, there could be even more upside. So ROKU solid. GameStop, GME also is erupting today, up 20%. And for no valid reason, at least from what I'm thinking or seeing rather. Maybe I'm missing something. But overall, GameStop is crazy, right? Looks like overall on the 4-hour chart, we are holding the wedge. We're in the wedge still. We ended up holding an uptrend today. You guys can see it if this wants to come down a bit so you can see it better. You can see we held an uptrend today at about, what was that, 135. Now we're in the mid-160s. And on the 20-day chart, you can see there's still some juice left for GameStop here. Maybe to about 175, 180, 190 towards the resistance of the wedge. And I'm actually going to set on alert at about 190. If it takes that out, don't be surprised if we get another rally on GameStop, guys. This could be breaking out aggressively from there. And the last one for today is EA, also known as Electronic Arts. This one ended up going up not much today or the past couple of days, but end of March into the early April month, this month we're in, it went up $10 a share. It saw a nice pop, and what that is telling me is the uptrend is holding. We held a higher low at that point. Now we're pushing up to the resistance point from back in July, also back in December, January at about 140, 145. So I think if EA could take this 145 level out, which ultimately I think it's going to do, the ascending triangle is going to play out, and there's upside from there, probably to about 151 at least, which is where we were back in 2018, almost 3 years ago, guys. So this stock, think about it, guys. If you bought this stock 3 years ago at 150, you're still underwater. That is the difficult thing about the markets, and that is why it's so important to time stock. Well, you can't time stocks perfectly, but you have to be very nimble with your buys. A lot of people just look at any stock, they throw money at everything, and you really have to be careful when you're looking at stocks like this. And I wouldn't really consider EA as a buy right now for a long-term investment. This is more for short-term stuff. Again, if we break 145, 150, 155 is where we could be going. But yeah, you gotta understand. And we've seen that in countries like Japan or whatever, where the market was down for 20 years or it didn't recover back to where it was 20 years ago. for a long time, if you guys know what I'm talking about. And you have to understand, some economists think that could happen to the U.S. economy, right? The U.S. stock market. And by that, I mean, people think, oh, if you're buying stocks now, we're going to get some kind of crazy crisis here, financial crisis, to the point where the S&P might not be 4,000 again for 10 years down the line. You know, that could happen. I don't want to be a Debbie Downer, but anything is possible. Could you imagine if the S&P, and this is a little side tangent here before we end the video, could you imagine, okay, S&P's at 4,000, very frothy, PE is at an all-time high for the S&P. Could you imagine if it dropped down to 2,000 and it trucked along for a couple years from 2,000 all the way back up to 4,000, and let's say we got back to 4,000 in 2027, 2028 or something, hypothetically. If you were buying now, you wouldn't make your money back for a decade pretty much, which I don't want to scare you all. I'm just giving you guys examples of things that could happen, and you have to be prepared for things like this always. And by being prepared, I mean, yeah, we're going to have money in the markets. Of course, I have stocks that I'm not selling, and I'm going to have cash as well. So if the market does tank 50%, I'm not all in the market. I have some capital to average down, and I'm working on, my income sources. You guys should be doing that as well, so we have cash flow coming in that we can buy stocks at the bottom as well as on top of the cash that we already have in our portfolio, if that makes any sense, right? So we're about 21 minutes in. We're going to wrap the video up here. I hope you guys got some value out of this. If you did, smash that like button for me. Make sure to subscribe to the channel and shoot me a comment down below if you stuck till the end. I really appreciate you guys. If you did stick till the end, say stuck till the end down below. Thanks a lot for watching, guys. Make sure to also check out my Patreon for buy and sell alerts, call outs, all real time, by the way, and morning update videos every Monday through Friday. And you guys get more access to me and exclusive content on there. That is on Patreon. You could also get $30 from M1 Finance, $10 from Coinbase. All of those are linked down below. I'll catch you all in the next video. Thanks for watching. As always, guys, stay safe out there.